All right, guys. Revisiting EFR. I did a podcast on Energy Fuels Inc., Toronto Stock Exchange, a little while back. And I believe I was saying was getting ready for stage 2. Well, guess what, guys? Here we are. That thing is 1 day away from a bona fide, confirmed crazy stage 2 explosion, guys. Really, really nice. The base is awesome. This seems to be a A++ setup all around the board. So with no further ado, let's do the monthly candle chart, guys. Look at that crazy base, man. Woohoo! Man, I'm going to have to zoom in. That's tight. Tight. That's what, a 3-year base? More? Wow, look at that. Just slowly down, going down. Explode. Make those big candles. So the base is still here. 177, pretty much. Here's the monthly defined. There's a couple of things happening here. All right. This is our candle here. The month of June ending tomorrow. Well, I'm going to post this Friday morning, so Friday is going to be the last day for the month of June. Definitely confirms this breakout and reaches the target of that implied measure move for that base in one shot. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. A year, guys. And that target is reached right there. But that's not what we're looking at. The target, remember, patterns, sharing a bigger patterns, same support. Its target, bring you all the way to tracing out a bigger patterns resistance, giving you a new implied measure move. What? Giving you a new implied measure move, bottom to height. Guys, man, this is like it just exploded. Copy, create parallel line right there. I have to zoom in some more. Give the merit that stock. There we go. That's pretty. Even this one, go a little higher. Okay, this target's reached. I'm going to remove that. There we go. Just a little over here. And that added to breakout line. There you go. So we got a target. So tomorrow, if we close above the 287 level, that gives me an implied measure move to just under $4, $3.95. Beware right here. This is previous support and resistance. You see right here, support and resistance. And now that resistance has been tested here. We just drove right through it. I'd like essentially a close even above that. That would be awesome. So that would eliminate this barrier right here at the 306 level. How high is this one? 305 level. So if we get a close above 305, that is a win-win-win, guys. We're going to get even a bigger measured move. But remember, the further away targets, the greedy targets, the least probable we are of reaching them. If you had a choice, choose the smaller pattern closer to the breakout line. That implied measure move has a higher probability chance of getting reached than the further away move. And what I like about that closer target, 395, below round number, below here, this important, this resistance right here that we're going to probably hit at the 410 level. That bigger pattern, which could be just me not drawing properly, not reading properly the chart. gives us a target that has to blast through these important levels, the 395, the 410, and all the way here to 432. Just keep all that in mind. You could always cheat on the targets, cheat in your favor. That means taking at least good target, giving you at least good risk to reward ratio, but higher probabilities of reaching that possible target. So I really want to close above 305, guys. Close above 310, 315. It would be awesome, guys. Just eliminate all that. It's a week close coinciding with a monthly close. I love when that happens. Harmony is attained simultaneously. There's no lag. And that's how you're comfortable. All these clues, all I'm looking at, all this information, that's what gives me the confidence that this is an A+ stock. If I'd be playing just my classic chart trading framework, I put my entry just when at the candle close, or wherever this closes, the monthly candle. I put my sell stop right here under the wick of the breakout candle. So if it's 238, or if this is 240, 238, I put my sell stop here. And I put my profit limit, I probably put it here at 395, right under that round number. And hey, that's like that. And that's all it is, guys. Simple as that. And then I'd forget about it, move on, go play tennis, swim a little bit, just chill out. But no, this is Secret Wars, and I'm doing Stan Weinstein Revisited. And look at that, man. Look at the volume. So telling. So telling. Okay, I'm going to remove all these trend lines. Remember, 305 is a monthly defined, ultimate, super duper breakout line, breakout resistance that we want to be above. Okay, Stan Weinstein, what do we do? Ichimoku cloud. Red cloud resistance, we're above it, check. I don't remember when I did the previous, my Secret Wars episode on the EFR. Maybe we're right here in the cloud. Still in the cloud, so that's potential resistance. You want to wait to be above. I'd have to check. Or you could check. Remember, breakouts build on breakouts. Look at that volume picking up. It's actually a breakout off this base, but you're still under the red, the resistance right here. 30 moving average still going down. So even if you bust, get sucked back in, a little more churning, market churning. And that's what you want to try to avoid. The stand system is built that 30-week average is going up. You're above important resistance, and you avoid this churning. What you're going to have instead of that churn, that long churn, even if it's healthy, it's on the contracting volume. You can have bursts, pullbacks, 1 to 3 months, not this long, shorter, and then you keep going on and on. Moving your sell stops under the laws if you're in trader's way, or under the 30-week moving average along the way. And that's all you do, guys. Then you could draw a trend line. 3 consecutive points is a valid trend line according to Stan, and the break on the 4th, that's when you exit. Cool, right? Go check my previous Secret Wars episodes, the long ones, the ones above 20, 25 minutes, 30 minutes. And I go in detail doing some practice on the historical charts. Okay, look at this nice build. Volume. Okay, let's do it. Right here. Oh, it's gonna be maybe some resistance here. Well, Ichimoku cloud defined resistance is whatever resistance we had here. It has evaporated over time. That's what a stage 1 base is. Stan always mentions close overhead resistance. Watch out for that. Well, Ichimoku cloud kind of helps you, guides you to tell you where that close resistance is. And right now, that resistance over there, according to the Ichimoku cloud, has been evaporated, and you're now above it. And just look at that crescendo volume, guys. So I think the breakout happened just here. And the bottom of the pattern is right here. Looking good, right? Remember 305, if I get a close way above that, maybe 310, be awesome. So let's wait for tomorrow towards the end of the day, close to the closing bell, where just wait when you're close. You already have the volume confirming the breakout. I'm pretty sure that's going to be tomorrow. If you add on there, it's going to be twice the average volume. It's already pretty much twice the average volume of the previous 4 weeks. And it's just going to rocket tomorrow. You have one more day there. You're going to have a lot more. I don't have the Mansfield indicator, and I really wish I had it. I think it'd help me a lot. I'm going to try to figure a way. Maybe I could pop in the charts, my tickers I'm looking at on screener.nextbigtrade.com, and leverage his system where he uses stock charts, and he has I believe he has a Mansfield indicator in there when you click on those weekly charts. I gotta figure it out because Stan's triple confirmation includes the Mansfield indicator, and I'm using the RSI. I'm comparing the stock against itself, its performance, and not I should be comparing it to the index it's in to make sure I have an outperformer. Okay, that's how much to do, guys. But I have the volume. The RSI is going upwards over halfway territory. I'm breaking out above horizontal resistance. Guys, 3-week average going up. This is beautiful, beautiful stage 2, guys. This is it, man. If you ever saw one that looked good like that, you got it here. This is definite stage 2 breakout. Bonafide. Get in now. Unless a crazy candle Friday, then it gets sucked back in below that. You're set. Harmony with the monthly candle. Defined breakout. Harmony on the weekly, applying Stan Weinstein stage analysis. 30-week average has a good slope. Remember, before you get a downtrend, and if you have an upwards slope, it has to go neutral and then down. That's a lot of negative price action. So if you get in here, you're pretty good. I'd put my sell stop here under 223. 219 maybe under the round number. Make sure you have a lot of wiggle room. You could always move it up, but that's the greed, right? It's like the greed thermometer. If you're not greedy, your sell stop, you put it all the way down here. And if you want a bigger position size but more risk of getting triggered out, you go like this. Remember Price is Right, the guy on the mountain that goes up, and he goes like that. And the closer you are, eventually, oh man, I want a huge position size. It's never pulling back. And just to piss you off, the next day, whoosh, sucks back in, but it closes on top. You get triggered out. And then you see it rocket, go back up, and then you say, man. Well, after a few of those lessons, just better put it down here, sleep at night. It goes down the next day, it goes down the week after. You have a pullback that's way stronger than expected, that sinks back in through the resistance line here and then goes back up, then you're safe, guys. If you're below 30-week moving average also for your sell stop, you're even better. So below the important resistance of the takeoff pattern, below 30-week moving average, these are safe check marks. These are get some good sleep check marks. If you want some not sleep so good and bigger position size, move it up. Greed. Emotion management techniques, helping you adjust your initial sell stops, because the framework's there, it's telling you where to put it, but I don't know, always have a feeling, let's cheat it. It's going to the moon, has a volume, it can't go down. Put it back down here, lower your position size, and if you have to add on, look, it's going to go back down, guys. Not always, most of the time. Within 1 to 3 months, it's going to come back close to the breakout line. It's going to get triggered. So you're going to have another occasion to add on here. If you notice that it contracted like this, a perfect contraction, this one. With volume going down, you'll be able to add on the pullback. So if ever you want to get greedy, the motion management technique is, I'll just get in, put 1 foot in, and I'll play the pullback on low volume. Okay, guys, that's it for me. EFR, man. It's a go. Ciao, man.